a sea of blue there.
Oh,
So they've all joined up together.
okay.
Welcome to the meeting, Graham.
Yeah, I was just making a cup of tea.
Oh, making a cup of tea. Right.
Yeah.
You're going to give us all a cup?
No, I'm here now.
Right. Can I warn the committee that we are now live, and this is being broadcast to a rapt audience all around the world. So be careful what you say, please. Right. Good morning, any members of the public who are watching. I'm Councillor Adrian Axford, Chairman of the Isle of Wight Pension Fund Committee, and I would like to welcome all members of the committee and other participants here this morning. Do you want me to get everybody to shout out their names, or do you want me to read them out? Or what? I will read out the names of the members of the committee who are present. You can wave if you like. This is the councillors: Barry Abraham, waving; Debbie Andre, Vanessa Churchman. You're not going to wave, Vanessa? Andrew, oh, there she goes. Andrew Garrett. Thank you. It's a bit like University Challenge, isn't it? Graham Perks. And Steve Milford as the employee representative. Gives away, Steve, thank you. And we have apologies from Councillor Paul Brading, who has another meeting, I'm afraid. And there are a number of officers, board members and external representatives also in attendance. Right, so can I welcome in particular Emma Garrett and David Walker from Hymans Robertson. If you are there somewhere in the background, we can't see you anymore, but welcome to the meeting, and you'll be starring later on in the day. There is new legislation in place which allows meetings to be held remotely by whichever means are available to the local authority. Mobile phones should be switched off, please, unless they're being used for the meeting. And all participants should be reminded to allow for a slight pause prior to speaking for technology to catch up and display correctly, and obviously also to switch on your microphone. Please only speak when I ask you to do so, and remember to turn your microphone and video on before you speak. Voting will be taken by a roll call. When your name is called, please could you confirm whether you wish to shout out for, against or abstain. That's all we need. If the committee resolves to exclude the public and press, which is later on the agenda in particular, the live stream will be stopped. So we will now move on to the agenda. Item 1, minutes, which is to confirm the minutes of the meeting held on the 2nd of September. You've all had these circulated prior to the meeting. Are you all happy that I sign them as a correct record of the meeting, please? Yes, there is no objection. So we consider those as approved. That's your copy there. Go on to item 2, declarations of interest. We have received no declarations of interest so far. If you do have an interest in an item on the agenda, please indicate now or later on via the chat function if you have something which has not already been declared. I'll pause for a moment in case there are any interests at the moment. No? Okay. Item 3 is public question time. Members of the public were invited to submit questions in writing prior to the meeting. Megan?
No questions have been received.
No questions have been received. No written questions have been received. So then we move on to the main agenda. Item 4 is the governance compliance statement, which you will find on pages 11 to 54, which I've crossed out. All these numbers are 2 pages out for some reason. I've got 9 to 52, but anyway, it's the first section. And for this one, I will pass over to Jo Thistlewood, please.
Thank you, Chair. Can everybody hear me okay? Okay. This is an annual requirement to publish the governance policy and the statement of compliance with the governance policy on an annual basis, obviously. The governance policy was approved at the last meeting of the committee. And so this is the statement of compliance for the year ended, or the period up to quite recently, but covering mostly the year ended the 31st of March 2020. Each section of the governance compliance statement has been circulated to members between committee meetings as detailed in table 1 at paragraph 12 to this report. Comments received from members to those circulations are included in paragraphs 13 and 14. In terms of the governance, the compliance level, the pension fund is generally compliant with the standards of governance expected. There are 3 key areas of non-compliance which are set out in paragraph 3 of the report, namely a lack of a formal induction programme for board and committee members, the absence of a specific learning and development policy for board and committee members, and the failure to maintain a formal risk register. Members have had the opportunity to comment on the compliance statement during the period between meetings and have had the opportunity to read this report. Unless members have any further questions, I'm happy to move to the recommendation. I'm happy to take any questions that members may have.
Right, as Joe says, this is a recommendation from the pension board, which, as you know, is a bit like a scrutiny committee for this committee. And so can we ask if there are any queries, please, on this report? Councillor Garrett, would you like to speak?
Thank you, Chair. So obviously we will move to a recommendation. My comment around this is on the capacity of the officer team to deliver on getting to us a point where we are fully compliant. And I'm very aware there are other things being thrown at us, exit caps, McLeod and whatever, and who knows what else the government will find to throw into the mix. It has been something I've raised from time to time, the capacity to deliver on the workload. And I'm wondering if it's time, given that the committee will be the ones hauled over the coals if somebody came along and said, look, you've been aware you're non-compliant or partially compliant for some time, what are you doing about it? Is it time to get somebody, I don't know, who would it be, the Section 151 officer or even the chief executive to come before us and explain the extent to which they've assessed the capacity of the organisation to deal with these things and ultimately help us as a committee fulfil our responsibilities to be fully compliant, and of course not requiring us to literally work our staff into the ground in order to do that. It's ultimately we have a responsibility for staff welfare as well. So I think it is time that maybe we had somebody from the senior management team before us to look at that. And Chair, you may remember one of the very earliest questions I asked when I joined your committee back in 2017 was around this capacity issue. So it's not something that we haven't been aware of for a long time, and I think senior managers should actually come before us and account for themselves in this regard as to whether or not they feel there is the capacity to ultimately allow us as a committee to meet our statutory duties.
Thank you, Andrew. Joe, do you have a comment on that? And who would this person be that we dragged in front of the committee to answer the question? Would it be you?
Sorry, Adrian just got a glare. Thank you first of all for the support that the concern you're sharing around officer capacity, Councillor Garrett. I'm not in a very good position to be able to answer that, but I would say I would welcome some challenge to an extent. I think the person to respond to would be the Section 151 officer. He is not my direct line manager, but is my line manager's line manager effectively. But in regulations and statute, he has statutory responsibility to ensure that the pension fund is appropriately governed and administered, as well as the committee having the responsibilities and the board supporting that committee. So I think it would be the Section 151 officer who should be asked.
So Andrew, are you suggesting that we then pass a message through to our Section 151 officer, ask him to attend at the next meeting to comment on that particularly? I think we're talking about page 9, paragraph 3, where the shortcomings are.
Yes.
Would you like us to do that?
I am, Chair, indeed suggesting that we should. I know we could ask for a written note, but that doesn't really allow us to properly get to questioning somebody around this area, and I think it is going to be very important to do so, given we've got, what is it, McLeod and other things that are coming in as well, and given that we're also in this very difficult time as well, where there is natural stretch on people otherwise. I think we do need to hear if this is something that can be addressed, so that we don't find ourselves, ultimately we are, as the committee, are the ones who would be wrapped over the knuckles or whatever. So we need to make sure that we've made it very clear that we're aware of our responsibilities on this, and given the appropriate challenge to those officers responsible. So if it is the Section 151 officer, I'd be very keen to put these questions to him.
Right, so I'll ask for advice from Joe as to what the procedure would be. Do we need to tack that onto the end of our motion this morning, or is it a separate item?
I'm going to defer to Megan.
Yeah, that will be a separate, that can be a second part of the recommendation.
Okay, so at the moment we've got the recommendation which is on page 14, basically to approve this statement, but we could add another sentence to it, and we could say the committee requests the Section 151 officer to attend the next meeting to comment on the shortcomings shown in item 3, paragraph 3 on page 9.
Chair, sorry, if I can just come in before we go to a recommendation. It's Councillor Andre here. There are several comments in the chat bar of people wanting to comment on this. If you would indulge, Chair, before we go to a recommendation, that we hear further comments.
That's fine.
Thank you.
Who is, Vanessa's waving her hand.
Councillor Churchman here.
They are actually in the chat bar. There is a list of people waiting to ask.
Unfortunately, I tried to use the chat bar and I can't make it work. I know it's probably me, my IT is bad, but I just cannot make the chat bar work. I don't mind waiting in the queue, Chairman.
Well, Debbie, is it right if we ask Vanessa to go first so she doesn't get forgotten and then we'll take everybody else then? Is that right?
Chair, over to you, Chair. I was just wanted to make sure that everybody's views were heard.
You're quite right. I'm not following the chat bar myself. I'm leaving that to Megan because I'm doing 6 things already and I can't do that at the same time. So Vanessa, would you like to start? Councillor Churchman.
Right, thank you. On page 48, on P7.5, talks about the things with contacting scheme members, and I'm just wondering how on earth do our current staff cope with all this, what I presume is extra work? That's the first question. And then on page 51, P9.1, have we had notification of any of the breaches of the law, please? Thank you.
Who can answer that?
In terms of member communication, we have there's a couple of ways that we do that. I mean, mostly that's done through the pensions administration team, who have the member self-service portal. We're doing newsletters, etc., etc. It is something that we do need to work on. We are aware of that. We have a communications policy, but what we don't have is a communications plan to fulfil that policy. Member communications is another key area that we do need to develop. It's on the list, to be perfectly honest, and another something that we do need to work through. In terms of breaches and breaches of the law, The pension board had a development session at their last meeting, which I did circulate the slides and the recording through to committee members. We have we've got some work to do on our breaches policy and our recording and reporting of said breaches, just to make sure that everybody is aware of their responsibilities and that we can properly report, and also including what is a breach and what is a complaint, etc., etc. So there is another piece of work that needs to be done on that. That's the board's next project, I think. But again, it's just adding to the list of things that we need to work on, which kind of exacerbates a little bit the issue that's been raised by Councillor Garrett.
Okay. Right. I now have a little list of people who'd like to speak, and it's going to be Steve Milford next, then Barbara Milton and Barry Abraham. Debbie, did you have your name down to speak, or are you just telling me?
Not yet, Chair.
Not yet. That's not correct. Right, Steve, would you like to start?
Yes, thank you, Chair. My comments are on the factors on page 69. These are the financial assumptions behind the valuation.
Not on that agenda, right?
Also, not that far ahead. Yeah. Okay. I'll bring my question in later then. Okay. Thanks.
Don't forget, wave your hand if I haven't done anything about it at the right time. All right. Okay, Barbara, is Barbara there? Barbara Milton, are you there?
Yes, I'm here.
Next.
Yes, I'd just like to comment on Councillor Garrett's proposal. The board, I think I can speak for the board, we would welcome input from the 151 officer and further support for Joe from the 151 officer. We have concerns about the speed of the breaches of law and also the risk register, and I think that the buck stops with the 151 officer, and I think he should be more involved in the pension fund.
Okay, so you would be happy to support the extra bit that we came earlier on from Andrew Garrett? Yeah,
definitely. Good. Yes.
Thank you. We're on to you, Barry. Barry Abraham.
Yes, I very much support what Andrew has actually said. I do think sometimes the director should actually come and answer the to the committee, particularly when you've got legal issues, if we have potentially with this. I think that we should actually challenge him and make sure that we are, Joe is telling us everything that she knows, but I think he needs to be aware also. And I'm concerned, it's something right across the council. We've got officers who are reaching almost burnout because of the work level that they're actually having to take on at the moment. So I think I really will support what Andrew's, if he's put that down as a motion, I would certainly second it, Chairman.
Thank you, Barry. So Debbie, would you like to add anything at this stage?
Thank you, Chair. Yes, thank you for bringing me back in. I'm looking at the recommendation on page 14, and we are being asked to approve the publication of the statement. Now, bearing in mind that, as has already been highlighted by colleagues, there are several areas where we are partially compliant and others where they actually raise concern. I think any recommendation that we put forward should be working towards supporting officers to actually bring the statement up to full compliance.
Right.
So I agree very much with everything that's been said. I think we do need to be mindful that there is a capacity and resource issue, but I think as a committee it's important that any recommendation that we put forward shows that we are working towards full compliance. And obviously that's as we've said, that's something that isn't going to happen straight away. But the issue of timing has already been raised. So I think, as I say, that wording does need to work towards full compliance.
So are you asking to add a few words to the first recommendation of the approval, or we're going to add something onto the second part, which is asking the Section 151 officers to come in and see us?
I think it should be included in the second part as a complete recommendation, but I'm happy to hear what other colleagues' views are on this.
So could we phrase it then? We would wish to highlight the items on paragraph 3 and wish to work towards resolving them. Is that any good? I
think, is that in addition to inviting the Section 151 officer? Yes. Yeah, I think the committee recognises the work that has been put in, but also recognises that there are areas where we are not fully compliant.
Yes.
And yes, so yes, I think it needs to state we recognise the work done, but we recognise that there are areas where we are not fully compliant, and the committee are seeking to support officers to bring the report to full compliance.
So we will come back with the full wording of the
thank you, Chair.
Recommendations in a moment. I would just make one point. Sometimes you hear people say that we can do such and such for the pension fund and it won't cost the council anything because it all gets charged to the pension fund reserves. I'm sure you've all heard that being said in the past. And any work, correct me if I'm wrong, Joe, but where we have employees who work solely on pension fund matters, for example, calculating pensions, working out what their contributions are and so on, they are not paid for by the council. They are charged directly to the pension fund accounts. And so sometimes people say, well, what doesn't cost us anything, the pension fund can pay for that. But of course, in the long term, the council does have to top up any shortfall in the pension funds. We are caught in a trap in the middle. The rate of contribution level from employees, from our employees, is fixed nationally. By I think union negotiation, by central government, the benefits are fixed centrally. So we have no control over what's paid in by the employees. We have no control over what's paid out. And we are piggy in the middle because we have to make up the balance. And that's what our contribution levels are, which we'll come to later on in the meeting. So although you can say, well, take on 10 extra staff to sort out all these problems and charge it to the pension fund committee, over the long term, the council will have to pay for that because it's got to sort of catch up on anything which is shortfall, unless we have a huge increase in the value of our assets. I just put in that caveat, that's all. But otherwise, so Megan, are we in a state? Is there anyone else who would like to speak before we go to the vote? So in effect, we have two parts to the motion now, and I'll get Megan to. You've all got the first part of it, which is as printed on page. Sorry, page 14, which starts the committee approves the governance compliance statement. So Megan, could I ask you to read out what the second part is going to be?
Yeah, so I think, can everyone hear me okay, first of all?
Can you all hear?
Yeah, so I think we've got the committee recognises the work that's already been done, but recognises the areas of not full compliance. The committee seeks to support full compliance and invites the Section 151 officer to attend the next meeting to address this.
I hope everybody heard that okay. Are you happy to use that wording? All right, got a thumbs up and some nodding. That's good. So in that case, I will formally propose that motion. Could I ask for someone to second it, please? Debbie's seconding it, and we will do a roll call for the vote. So over to Megan.
Yep. Councillor Abraham.
4.
Councillor Andre.
4.
Councillor Churchman.
4.
Councillor Garrett.
4.
Councillor Perks.
4.
And Councillor Axford.
4.
It's unanimous, Chairman.
Thank you. So that is passed. Thank you, everyone. That was item 4. So we now move on to item 5, which is the annual report and accounts, which we did touch on at the last meeting. And I think I will ask Joe Thistlewood, the Technical Finance Manager, to present the report.
Thank you, Chairman. As the Chairman just alluded to, the process for the approval of the annual report was set out at the last committee meeting, and further activity is confirmed in this report. As stated in the covering report, the full annual report containing all of the items that are listed in the table of contents on page 54 runs to over 200 pages. So I haven't presented that as an appendix to this report. The items in italics in that table are those items that have not previously been seen by the committee, and those are the ones that are included in Appendix 1, the extract of the annual report and accounts. The key issue towards the completion of the Pension Fund annual report and accounts is the conclusion of the Council's audit, which is this year, currently, I can't read my writing, currently delayed due to objections received by the auditors in respect of Newport Harbour's accounts, which are contained within the Council's accounts. The Council remains in full discussion with its auditors, who at this stage have said that they can see currently no reason why they would miss the 30th of November approval deadline, so the presentation of the Council's accounts, including those of the Pension Fund, at the Audit Committee on the 23rd of November. Due to the timing of various committee meetings, I'm proposing that the committee here today adopt the annual report and accounts subject to the completion of the final audit, and that a report will be brought to the next Pension Fund Committee meeting, which is on the 25th of November, 2 days after the Audit Committee meeting, to confirm the status of the Council's accounts and therefore the ability to publish the Pension Fund annual report and accounts. It's slightly complicated this year and for matters linking to both COVID and the objections to the Council's accounts. I'm happy to take any questions on either the content of the annual report and accounts or the process. Otherwise, move the recommendation. And Councillor Axford, this is where Steve Milford had his question.
Right, Steve, would you like to ask your question now?
Yes, apologies for jumping the gun a bit with the previous. Yeah, my question is on page 69 of the report in my pack. It's around the financial assumptions. We've got factors for discount rates, salary inflation, and CPI, retail price inflation. Just really a sort of comment and question that obviously these factors, they have to put in some assumptions, but clearly the actuals may differ slightly from that. For instance, the pay award wasn't 3.1%, it would have been different to that in that year and different again this year. And these seem fairly small percentages, but obviously a slight difference can make quite a difference to the actual valuation if the real figures are a bit different. I just wondered how that is sort of taken into account, and really just to get confirmation that sort of even a 1% difference could actually make quite a big difference in the valuation. Thank you.
Yes, can I just clarify that those figures in there, Joe, they are across in the future. It's not just for 1 year, is it?
Yeah, these
looking into the future.
These assumptions are those that were set for the 2019 valuation of the pension fund, the triennial valuation, which was presented to Pension Fund Committee meetings in November 2019, February 2020 and March 2020, at which point the assumptions set and the basis for which was presented by the fund's actuaries from Hymans Robertson. These are assumptions that are used to project forward at a point in time to see what is going to happen, or what contribution rates are set for the next 3 years. When we come to the next triennial valuation, which is in March 2022, an assessment will be made against actual performance compared to the previous assumptions, and then those assumptions will be varied again and set for the next 3 years to calculate the contribution rates for the next 3 years. So these are not fixed in stone. These are not a prediction of what will happen. These are an assumption of what could happen as a prudent set of assumptions to enable the longer term value of the pension fund assets and liabilities rather to be calculated at that point in time. A lot of work goes behind those scenes, and as I say, the assumptions and the bases for those were presented to previous committee meetings, and I believe, Steve, I think you asked a similar question at those meetings, challenging particularly the salary increase assumption. Those meeting information is online, so you can go back and revisit those pension committee papers and see the basis for those discussions.
I think historically, Steve, you always picked on these figures in the hope of persuading the Isle of Wight Council to give higher pay rises. Is that fair?
Yes, Chair. I think that's quite true.
Which is quite. There's nothing wrong with that, taking that position, as long as we understand what it is. You may be interested to know that, and again, Joe, correct me if I'm wrong, but there are lots of local government pension schemes around the country, and each one has an actuary, which is a different person, and sometimes they use different percentages for this. And so it means that where we say, for example, that we are covering our costs by roughly in the mid 90%, which is quite a high figure. And another county might say, give a different figure for their one. These figures are all recalculated centrally by the government on the basis of everybody using the same discount rate, salary increase and benefit increases to sort of make it possible to compare all the different pension funds in different counties. And I don't think we change drastically in the league table in that, do we?
No, we do. Our funding level does increase under the central government assumptions, which actually shows that our actuaries are being quite safe and prudent, and not giving us an unrealistically positive position. But also, it's not significantly different that we are being too negative.
Okay, is that all right, Steve? So we move on to Vanessa and then Barry after that.
Yes, I have a question. Page 72. Joe, what's a flexible retiree? I'm not sure I've ever heard that before. It's the first question. I mean, that's just for information. When you move down the page, IT expenses seem to have gone up. Recharged by WC, yes, slightly, but the biggest thing is premises expenses. They've jumped from 32 to 57, and I wondered why.
First of all, thank you for your questions. A flexible retiree is somebody who has reduced their contracted hours. So somebody who is close to retirement age or at retirement age, who has opted to take a flexible retirement, effectively to partially retire, take maybe 2 days a week as semi-retired and continue working for the remaining 3 days, but are able to draw down an element of their pensions. I guess As an anecdote, if you want to take further information about this, I'd suggest you talk to Steve Milford, who is a practical example, I believe, of a flexible retiree. But that would be outside of the of this meeting. In terms of the expenses on that page, on page 72, IT expenses are increasing predominantly because of the significant amount of changes to the scheme that are currently in place. So we've done a lot of work at the moment in terms of our member communications, as we've talked about. So we've done a lot of work with our member self-service portal, which has required a lot of development from our pension administration software providers, which is why, you know, that's incurred a little bit of extra cost. Going forward, there will be further increases, I think, in terms of IT expenses, which is primarily the software that we purchase to run our pensions payroll and administration system, primarily due to the massive changes that are going to be required from the cloud, the changes that are going to be required for the exit cap that are coming on, and all of the different changes to the scheme administration. So that's why those are increasing and will continue to increase. And then in terms of premises costs, I believe this is an overhead recharge and is recharged on the basis of headcount for the administration team. And the administration team has been understaffed for a number of years, but is now staffed up to capacity. So therefore, the headcount of the staff, the headcount of the team has increased, and therefore their per capita allocation of premises expenses has increased. I'm not sure what will happen going forward, because obviously, whilst we still have premises, we're not technically using them, but there is still a need to recharge them to services. So we will be, that's something that does need to be looked at from a council-wide perspective. But that's the reason why their premises recharge to the pension fund has increased. Does that provide enough information, Councillor Churchman?
Thank you, Vanessa. Thank you, Joe. Barry Abraham, next, please.
Thank you, Chairman. I did put it into the chat bar, but it's really to Joe said about Newport Harbour accounts have been objected to. I just wondered if there was sort of more information on that, because I know there's other areas that Newport Harbour gets objected to. So I just wondered if it's what the actual thing is behind it.
I don't think that's an issue for relevance for the Pension Fund Committee at the moment, Councillor Abraham. I would suggest if you have a question on that, I'd refer you to the Chairman of the Audit Committee, which is Councillor Barry, I believe, but probably to be taken outside of this meeting, if that's okay.
Is that okay, Reg? Can Barry raise that with you outside the meeting?
You're on mute, Reg.
Can you unmute yourself, please, Reg? We can't hear you.
Can you hear me now?
Yep.
Yeah, I'm not sure about the confidentiality of it, but if Barry'd like to ask, now I know Barry's interested in it, I'll find an answer and get it to him.
You happy with that, Barry? Okay, thank you, Reg. That would be great. Thank you very much. Is there anybody else down who would like to? No. So you understand what we're saying, that we can't really finalise these accounts because we haven't got the external auditor's opinion yet. The external auditor can't give the opinion on the pension fund on its own until it knows what the position is for the whole council. So we go around in circles. We're asked to provisionally approve these on the basis that the final approval will be at our next meeting, which will be sort of 3 days before the deadline. And it's a bit unsatisfactory, but we have been told unofficially by the external auditor that they are happy with the pension fund accounts. So if with your agreement, I will move on to the recommendation. We're on to page 57, which is subject to the completion of the external audit, as I just said. The committee approves the pension fund accounts for the year 31st of March 2020 for inclusion in the Isle of Wight Council Statement of Accounts, and the pension fund's annual report and accounts for the year ended 31st of March 20 for publication on the fund's website. So again, could I have a proposer and a seconder for that, please? Vanessa is proposing, and is that Barry down there? If Barry Abraham is seconding, we will have a roll call for the vote. Thank you.
Councillor Abraham.
4.
Councillor Andre.
4.
Councillor Churchman.
Was that me? I didn't hear it. Churchman, Councillor Churchman, 4.
Thank you.
Councillor Garrett.
4.
Councillor Perks.
4.
And Councillor Axford.
4.
Unanimous.
So that's unanimous. Thank you very much. That's passed. Right, now we move on to item 6, which is the investment performance to 30th September 2020. Been a bit of a roller coaster year, and we'll hear the latest instalment, which changes every day. I'll pass you over to Jo Thistlewood.
Emma, please.
Oh, to Emma. Emma, are you there?
Yes, I'm here. Can you hear and see me?
Can I introduce, if you haven't already been introduced, can I introduce Emma Garrett from Hymans, who's going to present this item?
Thank you. As Adrian said, it has been a very turbulent year for investment markets. So I'll cover Q3 and beyond and what the impact of that has been on the fund for its investments and also its funding position. So over Q3, global economic growth was positive, but that followed the huge dips that we saw in Q2 on the back of coronavirus. Whilst the economic growth for Q3 was rapid and positive, it is starting to show signs of slowing again as the impact of a potential second wave in most developed market economies has started to hit. UK inflation is now as low as it has been since 2015 and is not looking to rise anytime soon. In terms of interest rates, so the level of interest that banks will pay for borrowing and lending, trying to stimulate the economy with money supply, the US Federal Reserve are in no rush to raise interest rates, which is supportive of the economy. The UK are in a similar position with interest rates at an all-time low. They've been at 0.1% ever since March, and there's no sign of them rising anytime soon either. The Bank of England are even giving mixed messages over the use of negative interest rates, which could have a significant impact on your liabilities because the rates at which the interest rates are set impact on government bond yields, which then impact on the value of your liabilities. Reduction is a negative in terms of valuing your liabilities. Your liabilities end up bigger. On your asset markets, corporate bond prices did rise over the quarter. Defaults on corporate bonds do seem to be still contained primarily to the US in the retail and energy sector. Whilst default rate is more likely with everything that's going on with coronavirus, companies have been able to take advantage of these really low interest rates to refinance a lot of their debt and therefore stave off kind of default risk within those companies. However, the true impact of coronavirus and the impact that they have on global companies is probably yet to play out. We did see some volatility in equity markets over September, but broadly they rose globally. So global equity markets rose about 7%, but that was led by the US. So the US returns have been really strong, 10% over the quarter on top of double-digit returns from the start of the year as well. They've had really rapid growth in all the big tech stocks like Apple, Facebook, Amazon, etc. Whereas the UK picture is not so rosy. The UK has significantly lagged its global counterparts, returning negative returns over the quarter. So compared to the US, who was plus 10% over Q3, the UK was minus 4%. And that's on top of negative double-digit returns for the year to date. Stripping out the movements in currency, global equities still returned about 3.5% in sterling terms. So equities are positive overall for globally, particularly led by the US, not so great for the UK. It faces a number of headwinds, both coronavirus related and Brexit related. Since the end of Q3, so since September, markets have been broadly flat globally. They're up about 0.1%, but again, UK has fallen further by another 2%. So UK equity market is not looking great just now. In terms of UK property, this is commercial property that you're invested in, big office buildings, industrials, retail, for example. In contrast to the residential market where capital prices are rising, capital prices within the commercial property market in the UK are falling, and that's due to reduced demand because of restrictions from the lockdowns that we've seen. More people are working from home, there might be less office demand, less people can eat out at restaurants and shop in retail, etc. So the demand and therefore defaults on these buildings are increasing. However, total returns have been broadly flat, if a wee bit negative over the quarter, because you're still getting rental income. So even if capital values fall slightly, you're getting that rental income. Rental income will lag the market because there's existing contracts in place. You'll start to feel the effects of the restrictions when existing tenants renegotiate their contracts in the months and quarters to come. How demand for property is going to shift is still unknown. I've heard two contrasting sides. Yes, lots more people are working from home, so the demand for overall office space will reduce. However, those that do return to the office, companies will need much larger offices to accommodate social distancing measures. So they will actually need more space in many many opportunities. So it's yet to play out just exactly how the restrictions will impact on markets and how long these lockdown measures are likely to be in place. We're probably likely to see some big differentials in regions now based on the tier structure that we're in. Some regions will be more open than others and therefore will have a bigger impact on the economy than those local areas. So what does this all mean for the fund? Broadly, all your mandates returned positively over the quarter with the exception of property, which was just marginally negative. So your fund has grown in value by about 75 million over the period, up to 640 million. So the highest the fund value has been. Your funding level has remained broadly stable, and that's because that reduction to rates has been offset your liabilities versus your assets. So you're around about 90% funded as of today. There was some transaction activity over the quarter. You'll remember in July we decided to rebalance, and so the valuations account for that impact. I'll talk about that in the next item and the impact that that's had on the fund. But overall, markets have been not as volatile as we saw in Q2, broadly positive for your asset classes with the exception of property. The volatility and the true cost of the pandemic is still yet to play out. Governments are still very supportive of the economy with low rates, still providing lots of economic stimulus in the form of covering salaries and pumping money, making it easy to lend to companies. When that starts to withdraw, the full effect of the pandemic will still play out. So we are still cautious from a risk return in terms of equities and volatility. I think the big impacts are yet to play out.
Thank you, Emma. Are there any questions, please? Somebody saying something? No? If you look at page 113 for a moment, if I could just make a comment on that. Every so often we decide what proportion of our assets we're going to put into which asset class. So we might say so much in British shares, so much in worldwide shares, global equities, and so on. So we put them all in there and we have exactly the right percentage. And then, of course, the next day, some shares go up and some shares go down. So you never actually hit the target from one day to the next. It's only a rough idea, and sometimes when it gets wildly out of kilter, then we do adjust it, and I think that's what Emma was saying, which you're going to talk about in a moment. But we do try and keep the percentages correct, but the very nature of the world that we're in, we start on one day and then it's changed straight away. But I hope in a good way, because we have extra profits on particularly on global equities, which always takes us over the top there of the amount that, in theory, we've invested in. Are there any other questions, or can we note that report? I'm seeing lots of nodding, so unless anybody has any objections, we will note that report and thank Emma again for it. Now we're going over to item 7.
Had Emma finished the bit about rebalancing?
So rebalancing is the next report, so I'll start that now if you're happy, June.
Oh, the next part of this report, yes. Okay, off you go.
Yep, so as Adrian said, we're always trying to maintain the overall strategy within those allocations that we've set. You do have tolerance ranges a wee bit either way, but if something goes majorly out of kilter, we want to rebalance those assets, disinvest out of the overweight positions and reinvest in the underweight positions. That essentially means walking away from the table when you're winning, capturing the gains that you've received on the assets that have performed really well, and plugging any underweight gaps. This helps you to manage the overall risk within the funds, making sure you're not overweight to particularly volatile assets like equities in a period like we are in just now. So due to very strong global equity returns that we talked about earlier, the fund was significantly overweight to global equities with Newton. At the end of August, you're about 37% versus your target of 32%. Now, you do have a tolerance of a couple of percent either way, but even accounting for that, it was significantly overweight. So the committee did decide to rebalance at the last committee meeting, and that activity was undertaken in September. Now, coming out of equities is easy enough, but where do you put it? We're trying to come out of equities, so going into the UK equities, particularly in this market, doesn't look very appealing. And yes, you've got DGF, but we're trying to reduce risk within the fund. Property was gated at the time. You couldn't actually get money into these property funds if you wanted to. So we've taken some out and put it in within the corporate bond mandate, which was underweight. So we've not rebalanced the full overweight position. You are still running a little bit overweight to global equities, but we've topped up that underweight to Schroders corporate bonds. For the actual transition activity, we were able to align the trade dates, basically meaning that you're buying and selling at exactly the same time, so you're not exposed to out of market risk by having assets held in cash while markets move. So those were perfectly aligned, meaning that you didn't have much out of market exposure, and the costs were also very low. So coming out of the Newton assets cost just 14.5k coming out of the access funds, and it's actually was free to invest in the Schroders corporate bonds portfolio. It's single priced, and what that means is there's no spreads for coming in and out, but the single price can move. And what happened was on the day of trading, the price reduced, so you actually benefited because you got to buy more units within that fund with the money that you had, to the tune of about 40k. So the overall cost of coming in and out of those assets and the rebalancing activity was broadly positive for the fund. We will be considering your equity allocation in a bit more detail. You are very overweight to UK equities, and we covered that as part of the strategy review, and it's becoming more apparent as we see the UK economy and the impact that it's having on equity markets versus global equity markets. Do you have the right mix there for the years coming? And we will be addressing that in the development workshop later with UBS. Can we get a better mix and a better balance of risks within the equity portfolio? So we've done a bit of rebalancing here, skimmed some of the cream off the top with your global equities, but there's probably more to do there, which we'll cover in our development session and in the November meeting. But overall, we did a bit of rebalancing activity, bringing it back into line with strategy, which was broadly positive for the group in terms of costs.
Any questions on that, please? And I've disagreed on this point in the past, where I'm saying, well, if global equities are doing so well, why don't we put more money in it, not take money out of it, and then we'll get even more profit. But my advice didn't prevail last time. We will see what happens next time we discuss changing the proportions. No comment.
It's about running the right level of risk for the fund, so making sure that we stick to the overall strategy. It's not necessarily about getting as much return as possible, it's about making sure that we do that in a risk adjusted, consistent way that is not going to impact on your funding so much that it would swing contribution rates, for example. So there's a level of risk that you need to take to meet your funding objective. You are 90% funded, you were in that corridor of 100% funded. You don't need to take any more risk than you have to at this point, and volatility in markets is high. Just because global equities have returned double digits this year does not mean that they can't fall significantly again when we find the impact of coronavirus over the next couple of years.
And if I could just add one further comment, Councillor, just noting that, you know, as part of the there's a rebalancing relative to what your strategic target is, but there is also a proposal to increase the strategic target to global and reduce the strategic target to UK, so that we will be coming back to that again as part of the strategic review.
Okay, that's fine. Again, if I can refer to the table on page 113, where between the cost, the market value at June changes to the market value at September. You have to remember that in the bonds, for example, it hasn't been a huge increase. It's because we transferred 13 million from one to the other. And similarly in global equities, that's where it says access global equities. It hasn't gone down from 232 to 225. It's actually gone up, but then 13 million has been switched out of there and put into another asset class. So it can be a little bit confusing. Think, where's it all gone then? But it's just been moved around. Anything else on that item? Do you have anything more to add, Emma, on that item?
Nothing more to add unless anyone has any questions.
Emma, did you have, sorry, I may have missed it and I apologise. Did you have did you say about what our funding level was?
Yeah, so you're broadly 90% funded just now, which is quite flat compared to the end of June where you were 89% funded. So your funding level has remained broadly stable over the full period.
Thank you.
Which is reassuring, I think is the word. Vanessa, you got your hand up. Would you like to comment?
Yes, just one thing. I personally am quite worried about property. I sat in on a web a couple of weeks ago, and the comment was, because I mentioned again about property and it's empty and will we need all this office space, etc., and what are we going to do with it all? And one of the comments that came from, I can't remember which fund manager it was that at the moment, with the property market in the state it is, pension funds, etc., are frightened to revalue the property because it could possibly create a crash. I understand what you said about when people go back to work, they will need a bit more space for fewer people. But just how vast is the property section in the UK, for example, across pension funds, or am I asking an impossible question? Thank you.
So the Isle of Wight fund is invested in a property pooled fund, i.e. you don't personally hold the properties within the fund. So in terms of revaluing that, that's left to the fund manager, who will have lots of other people invested within the property fund, and that will be independently valued by chartered surveyors. So in terms of revaluing it, it will be constantly revalued so that you have a relatively accurate picture of that property fund. Yes, property is becoming more polarised. There's been significantly reduced demand for retail assets, for example, but there is higher demand in other aspects such as residential, so it will be up to the property managers to try and manage that risk. That's not to say UK property isn't facing a significant headwind. However, you are long-term holders of these assets, so you can stomach some level of capital volatility, providing you still get the rental income as well. That's one of the main purposes of holding property, is to get that rental income yield, which you are still getting from your managers. So regardless of capital value, it's not as important whilst you are not buying or selling property. You're just holding it and can therefore ride the wave. But yes, pension funds are huge investors in UK property. I don't think that what is happening just now will mean that lots of pension funds will pull out of property. It's very expensive to trade. It's much more likely that they will continue to hold it for the long term.
Yeah, and just to say, we are doing a central bit of research on at the moment on kind of 5 to 10 years out, what does the UK property market look like for institutional investors? And I think what COVID has done is actually accelerated some of the trends that we were already seeing in terms of the rise of online, the different use of office space, and actually it might be that there's greater, residential becomes a more established part of institutional property portfolios. As some of these office buildings or retail spaces converted to residential. So I think, Council, it's something that we'll continue to see evolve, but some of those structural shifts were already kind of in track, as it were.
And can I add to that? Joe has reminded me that we have invited Schroders to attend our next meeting to talk about bonds and property. So we can look at that in a little bit more detail next time, okay? Thank you. Right, so we have noted item 6. And we're now on to item 7, agreeing the process for procurement, etc., and new classes of private debt, and appointment of appropriate fund managers. And that is a very important part of the decisions for this committee today. So Jo, could you lead on that, please?
Thank you, Chair. I'll start on this. We've got 2 parts to this this section, this agenda item to an extent today. We've got this first part, which is around agreeing the procurement process and the selection panel activity. And then once we go into confidential session, we'll have some more information from Hymans Robertson on the shortlisted fund managers and the process by which the interview panel is carried out. So if you have any detailed questions about the fund managers, etc., we'll need to wait until we go into private session. But primarily we're talking about the process and ensuring that we're compliant with the relevant legislation, etc., to get the procurement sorted. So the report that's presented at page 121 onwards sets out the process by which the selection of the fund managers will be undertaken. Okay. At the moment, we have to do this outside of Access because Access is focused very much on the pool, sorry, because Access is very much focused on the liquid assets, so shares, fixed income, diversified growth, whereas the private debt infrastructure activities is much more illiquid and doesn't meet the same ease of pooling criteria that liquids do. So whilst Access are working on their illiquid alternative solution, we need to be able to deliver our own investment strategy. So we are working to do this outside of the pool, but bearing in mind what our fellow funds in the pool are doing and learning from them and you know, working to make sure that we get the right balance effectively. So the table in paragraph 10 of the report on page 122 sets out the process by which we've agreed the procurement. So because we are looking for effectively buying units in pooled funds for this, we're looking at an investment solution rather than the procurement of a fund manager to directly invest on our behalf. So we can avoid doing a full OJU compliant procurement and can do a simple shortlisting, which has been agreed through the exemption within the regulations and has been agreed through our procurement team at the council. So we're looking at doing 2 separate procurements or 2 separate appointments, one for private debt and one for infrastructure. And we've set 2 dates for those. Private debt is on 6th of November, which is next Friday, and infrastructure will be on the Friday, the 4th of December. So part of today's important decision to an extent is to confirm who will be on those selection panels. So I did send out invitations, and for the 6th of November, which is next Friday, I've got positive confirmation from Debbie Andre, Adrian Axford and Vanessa Churchman, as well as Steve Milford as the employee rep. Councillor Perks and Councillor Garrett are currently tentative. Councillor Brading has declined due to a prior commitment, and I've not heard whether Councillor Abraham is able to attend or not. The panel will be supported by Emma and David from Hymans, and Chris Ward has indicated as Section 151 officer. He will be in attendance, as will Joe Cook and myself from officer's perspective. We'll talk about the functioning of that panel in the confidential session after this after this bit. But I just wonder if firstly, I could get reaffirmation from Debbie, Adrian and Vanessa that they are able to attend on Friday next week.
Debbie, are you okay? Yes. And Vanessa, you okay? Can I just say, if in case for both of these meetings, both of these interview sessions, in case you're a little bit shy and wondering if you're going to look stupid asking funny things in the thing and don't know what to do, don't forget that we have got a list of suggested questions to ask, which is in this pack, in the purple papers, I think. So it's not as if you're going to be shown up as not knowing anything about it. This is really one of the most important things that this committee will be doing this year. So I'll go back to you. Sorry, Joe.
Yeah. Okay. Councillor Perks.
Yeah.
You're on mute, sir.
Yeah, if I can just say for Joe, sorry, that I'm spending 4 days a week on the mainland with my mother who's been seriously ill, and it still entails that so tomorrow, Thursday, so I'm over there Thursday, Friday, Saturday, Sunday, so I'm not going to be able to do the 6th of November.
Okay. Thank you very much for your confirmation.
All right, thank you.
Andrew?
I'm sorry to say, Chair, that I'm taking some days leave next week, so I won't be available for the 6th of November.
Okay. Thank you very much for confirmation. Councillor Abraham?
Are you there, Barry?
Yeah, I'm actually at the same meeting as Paul.
Right. Okay.
So I won't be able to.
So thank you very much for that confirmation. So the first part of this, the confidential session this afternoon, will probably be more focused on Debbie, Adrian, and Vanessa. But then the next confirmation that we need is for the infrastructure session, which is on Friday, the 4th of December. At the moment, I have Adrian and Vanessa have confirmed. Debbie, Graham and Andrew are tentative, as is Steve Milford. Paul has declined, and I assume as Paul has declined for the same reason that he's declining the 6th of November, Barry, you'll be declining the 4th of December as well?
Yeah, unfortunately, we have a cabinet meeting usually on a Friday, so it's a very bad day to be able to have meetings.
Okay. In terms of the 6th of November, it's not quite so important necessarily that we get confirmation today, but I would appreciate knowing as soon as possible, really, whether you think the 4th of December is possible. We'd like, again, you'll still have Chris Ward, myself, Joe, and David from Hyman's supporting that one. Emma's decided to get married, so she won't be attending on the 4th of November. 4th of December, we'll allow her that time. So we can work that through beforehand, but we would ideally like to have 3 elected members on that committee panel if possible. So if I could get confirmation from others before the 4th of December, obviously that would be very helpful. Otherwise, I can take questions at the moment on the general process, but otherwise, if you want more detail in terms of the shortlisted managers and the panel operation, that will be in part 2, which is agenda item 11. Otherwise, can I move the agenda item, the recommendation, which is on page 126, unless there are any questions?
Yeah, I can say I've just updated my response. I am available for the 4th of December.
Oh, that's good.
Thank you.
So that adds 1 to your numbers there.
And I've also just confirmed, Joe, for the 4th of December.
Thank you very much. That's great.
Well done, both of you. We do have another meeting of this committee a week or so before that. That's the 25th of November. So then is the final chance for anybody else who's not sure to let us know. That would do it.
Enough. Yeah, thank you.
Good. That's Joe can sleep at night now.
One less thing to worry
One
about.
less thing to worry about. Right. Now, you have asked us to consider the proposal, where are we?
126.
Page 126. I'm just turning to it. So the recommendation is to agree to the process and timetable for the procurement, selection and appointment of fund managers to deliver the selected investment solutions for private debt and infrastructure. That's the two new things we're doing. Can I propose that from the chair? Vanessa is seconding that, and we will do a roll call for the voting, please.
Councillor Abraham,
4.
Councillor Andre,
4.
Councillor Churchman,
4.
Councillor Garrett,
4.
Councillor
Say again.
Councillor Perks,
4.
and Councillor Axford.
4.
Carries unanimously.
That's carried unanimously again. Thank you very much, everyone.
Thank you.
Right. Now we have, I know I've said this before, but I will stress this. Item 8 is, I have asked Joe to circulate as many papers as possible in good time before the meeting, because as you can see, we've got 200 pages in our pack. Those of you who've got them in paper, which I have, is an enormous one, and that's leaving aside the other 200 pages which we could have included, which is our pension fund accounts. So you could have had 400 pages, have a Bible every time, and all these items here, well, not all, nearly all of these items here would have involved extra paper going to the committee. And so I've asked Joe to try and circulate things beforehand so everybody's got a chance to read them. And if you've got any comments, then you can bring them up at the meeting. But it does look like a huge long list, but that is intentional. And that's, if not, you'd have been here for another hour this morning. So look on the bright side. Joe, would you like to run through them and pick out? There's a couple of very important things in there to pick up on.
Yeah, there's a lot of information, and as Councillor Axford has said, there is just a huge amount going on. So I'm trying to summarise information as I've sent it out to you, so you can decide whether you read the detail or not. To be perfectly honest, a lot of this has been in relation to the governance compliance statement, so we've already mentioned that, and a couple of the invitations to the manager selection days, which we've also spoken about. I would like to highlight item J, which is the Access Joint Committee dates. We'll cover a little bit more of that in terms of the access update, which is going to follow in the confidential session as well. But there are now 3 pension fund joint committee dates between now and the end of this council year, on Thursday the 12th of November, Wednesday the 13th of January, and Monday the 8th of March. I can't remember who we've agreed which one Adrian's going to. I know I did ask, and Vanessa did say she was available for all of them. Simply put, I just need, as it was agreed at the last committee meeting, to share the attendance at the joint committee, because everybody has welcomed that attendance previously. I'd like to just ask for confirmation, not necessarily right now, but between now and earliest the 12th of November, as to which elected member will be attending those committee meetings.
Yes, I have tried over the last few years to involve as many members of the committee as possible of joining in these access pool meetings, just to get the feel of the thing. You may not necessarily need to contribute very much at that particular meeting, but you get the feel of it. You meet some of the other people. It's the 11 chairmen of the pension fund committees all along the south coast, not the east coast, is what it boils down to. And in total, have got assets of 40 billion, which is a lot of money, which is down to being decided by these 11 people. And those of you who have been on it have said that it'd be quite interesting to meet the people. Now, at the moment, of course, these meetings are held virtually, so they're on Zoom or whatever, Teams. And that has the benefit that you don't have to trog all the way up to London and spend a whole day going to a meeting for 2 hours. But the contrary is that it's not quite the same as today. It's wonderful to see you all, but it's not quite the same as sitting around the table together and the sense of teamwork and camaraderie, whatever you like to call it. So please think about going on these if you can. Again, at the moment, you don't have to go anywhere. Just come into, probably safer to come into County Hall in case there's a problem with the IT. But those are the dates. If anybody, particularly those of you who haven't already been part of it, then please think about it. So that's the 12th of November, and I think there's a cabinet meeting that day. The Wednesday, the 13th of January, or the 8th of March. I know it's a long way ahead, but think about it, please. And if you would like to go, if you're interested, please let Joe know.
The last item I would like to draw your attention to is just something that is completely blowing everybody's minds at the moment, which is item T on the list, which is the exit cap regulations. I don't want to go into too much detail here, but I will try and do a much more detailed report to the next committee meeting on the 25th of November and circulate information as it comes around. However, this is a long-standing item on the government's agenda. They did a consultation back in 2018, I think, on capping exit payments to for public sector employees to a maximum of £95,000 to just prevent the public purse being stretched unnecessarily by paying off the fat cats effectively. Ultimately, this HM Treasury regulations implementing the general public sector cap will have been signed and will come into force from the 4th of November. So the exit payments, so statutory redundancy, discretionary redundancy, compensation agreements, and pension strain costs paid to the pension fund for early release of pension will be capped at £95,000. This, however, comes into force before the MHCLG consultation on changes to the LGPS regulations closes, in fact. There's a conflict there between the fact that the pension fund at the moment, under current LGPS regulations, is required to pay full pension benefits to anybody who is made redundant post the age of 55. And that's historically been covered by an exit strain payment by the employer into the fund to cover the future cost of lost contributions effectively. Now those payments will be capped. The pension fund, until the new LGPS regulations come into force, will have to pay full pension regardless of the amount it gets on strain payments. So there is a risk to the pension fund at that point. The LGPS regulations, when they come into force, not only then allow for an actuarially reduced pension to the level of the reduction in the strain payment, but require for any redundancy, regardless of the total value of the exit payment, that the statutory redundancy payment made to the member is reduced from the strain payment paid to the pension fund, and the member's pension is reduced accordingly. This was a bolt from the blue. We didn't know this was coming in the consultation, and has the impact of hitting every single member who is made redundant after 55 with a reduction in their pension entitlement. There will be options allowable to members to potentially pay the statutory redundancy over to the pension fund to get their full pension, or to defer their pension to normal retirement age and take their redundancy pay. This is still not clear. The LGPS regulations are currently in conflict with the HM Treasury regulations, but will put it into force, but will be difficult to administer because it's not all public sector employers, it's not all pension fund employers, it's only public sector, so council and academies. There are issues with the legality of this at the moment, which is being legally challenged. And it's all a bit up in the air, but it is a very important thing for the Pension Fund Committee to be aware of and I hope I've put in one of the emails that's circulated round, to be at the moment, as a pension fund committee, you are required to ensure that we as a pension fund implement the regulations as they stand. We are not here necessarily concerned about the fairness of those regulations to our members. We can obviously have that concern, and we do, and Steve has quite rightly raised that in one of the responses to one of the emails. But here our responsibility is to the pension fund. Over here is our responsibility to our members and to our own personal potential circumstances. It's a very complex issue. It will require a lot of work from the administration team, and that's on top of McLeod, that's on top of all of our investment activity that we're undertaking and our governance compliance statement activity, etc., 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 adding to the complexities. I wanted to draw your attention to it and say it's not a done deal. Well, it is a done deal, but the actual implementation of that done deal is not decided yet. I will bring a further update to you at future meetings, and there will be a lot of information being sent around about this in the interim times. Please do ask questions. Please do comment, and if you have any input into any external organisations or external bodies that may want to respond to the LGPS regulation consultation, please encourage them to do so. That consultation closes on the 9th of November, and I'm hoping to put a response in from the fund. That was really all the points I wanted to raise, Adrian.
Thank you.
And happy to take any questions.
On that last point, and to do with this 95,000 cash cap, as you've just heard, the regulations are as complicated as could possibly be, and mere mortals like us can't understand what it's all about. But luckily, we do have an astrophysicist on a member of our committee, Councillor Garrett, who understands this immediately and will explain the detail of it to anyone who's interested. He's our saviour in our hour of need. So thank you again, Andrew. You're very welcome on board. Right, Steve, I can't see your picture, but I understand you would like to say something. Oh, there you are, yes. Steve, over to you. I think you're having trouble connecting up. Put your thumbs up if you can hear me.
I think he's fallen over.
Why are we still getting his picture?
I think his signal's frozen, so I think
what should we do?
I think just carry on and acknowledge that we'll come back to him.
I'm sorry, Steve, we've lost you. You've frozen. So we'll just have to carry on. I will invite you to come back into the meeting later on to make your point. Sorry about that. Okay, so we're just noting those items that are circulated. That was item 8. Now we go on to item 9, which is members' question time. Have we had any members' questions?
No questions have been received.
No questions. So in a moment, we're going to adjourn for 5 minutes for a comfort break before we start the confidential meeting. But to tidy things up from the point of view of any member of the public who's watching, can we take the motion to exclude the public and press first, please? So I'd like to propose that we exclude public and press because of confidential items. Could somebody second that, please? Debbie seconded it. Can we take a roll call, please?
Councillor Abraham?
4.
Councillor Andre?
4.
Councillor Churchman?
4.
Councillor Garrett?
4.
Councillor Perks?
4.
And Councillor Axford?
4. Okay, that's unanimous. So, as I say, can we adjourn for 5 minutes for comfort break, please? Don't take any longer than that, because we do want to get on, because we've got another meeting this afternoon. Somebody went ding dong then. Oh, that was you. Okay. See you in 5 minutes.